What's going on, everybody? Today is Wednesday, August 9th, and I'm going to go through a trade that I took today, kind of talk about how I managed the trade throughout. This move on NASDAQ netted about 150 points, and on ES or the S&P uh, from 78 to 18, so that was about 40 points. So pretty substantial move. I thought it was a beautiful setup. So before I get into breaking down the trade and how I managed it while I was in it. I'll kind of get into how I'm identifying trades, what setups I like, um, and what is really giving me that confidence to stick through and look for specific target points. So before I get into it, make sure you like, subscribe, turn your notifications on, so that when I make these videos, if you care enough, you'll see them going forward. So I actually got to the charts late on Wednesday morning, so I did miss this, you know, dump off. But it did play into what we're looking at yesterday. I mean, I can show you really quickly on SPY. Where are we on Tuesday? If you see, we actually had a nice little retracement back into that area that I like to purchase off of a discount put or in premium for the range, right, above 50%. So price got into that and rejected lower. What do we do? Take out the low and, hindsight, of course, bounce. But I'll show you how I identified that in real time. So let's go back over here to NASDAQ and ES on the same side. So I like to use them both in conjunction with one another. Um, it uh, it, to me, it's very good to see what is lagging, what's leading, and make decisions based off of that. So understanding where we are in terms of price level for both, I value that a lot. So, for example, as you can see here, yesterday's low on Nasdaq was blown right through, and we continued lower, and we blew through that low around 1050, and as you can see, there's still a lot more to go down here on ES before ES took out yesterday's low, which was 4482. Now, um, as we know, or anybody who uses the same type of trading ideology, when we take out lows, that would stand for liquidity being breached, and from those points, we can look for, you know, um, reversals, or on the flip side, you can look for, um, you know, kind of like a snowball effect. So it's always good. For me personally, I like to give it a minute and wait for some sort of imbalance in the opposite direction to form. That way, it gives me that extra added little layer of confidence that we are in fact going to reverse, rather than just try and pick bottoms, because picking bottoms is hard. If you watch my last video that I posted on Monday, I explained how you might have a decent idea that there was a specific low set or whatnot, but to me it's not as certain unless there's some sort of um, indication, whether that's an imbalance, a fair value gap, a order block being formed, something to that effect that is giving me that extra added layer of confidence that that is in fact a low, um, and we're gonna reverse. One thing that I used today that played out perfectly, to the exact tick, um, and now while I didn't buy the exact low, again, I'm not that type of trader. I'm not trying to pick out the exact low or the exact high to go short, right? Um, I can just use that information, put it in my back pocket, and as price continues to do what it wants to do, I can use that as a little bit more of a confidence boost into that next trade that I was going to take. So, for example, we took out yesterday's low and we continued lower. Where did we continue low to? 447825. Now let's go and take a look at the daily, and this is why I also value looking at higher time frames for specific levels. To me, higher time frame levels really do trump all, and you know, particularly they're important that I have an idea of them, especially while I'm entering trades. But as you could see, this was Wednesday's daily candle, and where do we go down to and stop dead in its tracks? Yes, right at that level, 4478, 25, right to the exact tick. And we'll zoom in there just for the non-believers. Boom. If you don't believe me, this chart was on Twitter yesterday. and this chart was in the newsletter over the last week, so you can double check that if you want. But moving on, go back over to my double chart here, and we'll see as we make that low. Here was one thing that was a decent or decent enough giveaway for me to understand that this might be a good spot for somewhat of a reversal here. So again, just before we get into anything else, check out that daily range, okay? And I want you to look at that imbalance right over 0.62 where we later rejected. That's, a trade that I didn't take, but, just for reference, you guys can take a look at that. So let's zoom in here and we will take a look, right? So reasons why I like this trade and the reason why I took it. Okay. For one, um, this setup right here where we have a low, a high, a lower low, and a break above that high, that would be considered a bullish breaker. So if you look, when you look and see the video that I'm going to put in at the end of this, you'll see here is my breaker, and we use the entirety of that candle. I know some people who are much more specific with it and use the body, um, for no other reason other than I like using the wicks. I feel like they work pretty solid, and that's why I use them. So as we get that break above, we also had a very, very mini little bullish imbalance here. And in the video, you're going to see where my entry was inside the breaker and that bullish fair value gap. You can see wick, body, wick, right? There's a gap, fair value gap. Price gets into that gap and takes off, right? So there would be, um, one of the reasons why I like that trade in particular, right? Also, if we are convinced that this is setting the range, which that imbalance right there, that added a little layer of confidence for me personally, that that was going to be a bounce area for that reversal, especially after we breached liquidity on ES. We took out that swing low from yesterday, and of course we bounced off that daily, the low of that daily bullish imbalance, right? And we did the same exact thing where we created a fair value gap right there. Price got into it. What did it do? It took off, right? So these blue shaded lines, they're another concept that I use from ICT that to me they're excellent as well. They are the new week open gap. So on futures you get 23.5 trading, but to be more specific with it, obviously Saturday, Friday night after 5 and all day Saturday we're closed. We open up Sunday night at 6 p.m. So Eastern, and you get a gap, and it's very interesting. And at first, I didn't think too much of it, but the more and more that I have these on the chart, I actually use an indicator to map these out, have them in specific colors, map out my midpoint of them, and everything like that. You'll notice how effective they are in terms of acting as a supportive resistance as price gravitates towards them. So that was to me another added layer of confidence. So there was a lot going on in this trade that made me feel pretty good about it and taking this thing long. So not only did I take this as a NASDAQ trade, I also took it playing SPX. So, and I have a tweet of the result of that trade where I looked for swing high. Didn't quite make it to swing high on NASDAQ, as there were a few heart attacks in the mix there. But what else did we have? Obviously, again, if this is the low of the range, this is the area in which I personally want to be taking longs, as we are below 50% of the range, even on a retracement up into where I would consider a really decent area to take a short. Um, just with the range on Nasdaq that we've had lately, and ES as well, the range is huge. For example, this is a 150-point move, right? If you were to hold the entirety of that move, which is very difficult to do, 150 times $20 per point, and you have your payout for Nasdaq. So, um, to me, I'm not particularly one to, jump the range. I like to be waiting for it to retrace back into it. But when you have ranges like this, um, you can kind of get ahead of it and try and take that reversal trade. Um, and for me, knowing that my stop was just going to be simply below um, this fair value gap right here. And on ES, it would have been below the swing low that we just set. But all right, so now let's pop over and I'll click on that video and I'll walk you through how I manage the trade.
If you're looking for a market newsletter, check out mine, Markets with Mando. It's recently been featured on Benzinga, Webull, TOS. First month free using code August100. I'll put the link in the bio.
All right, so we're back here. Here's the trade. I like trading futures on, and this is not a plug, but I use the Trade of 8 extension on TradingView. I'm able to move my stops, move my take profits, place the order right on the screen. So I like it. Just it's easy for me, and that way, if something goes against me, I have no problem sliding the stop up. As Nasdaq, again, it's $20 per point, so um, it could get out of hand if you're not religious with your stop losses. And that's how I am. I don't care. There's a lot of times where I do get stopped out and price will go to where I want it to go, but that's fine. I would much rather protect myself. And again, small stop outs aren't going to kill you. It's the ones where you're bag holding and you get wrecked that way. So all right, so let's go into it right now, and here we go. So you can see we get on down into that breaker right there, and we start to move up following that, right? Bouncing out of that fair value gap again. I had my stop right below it, so any lower, I would have been out of it, no problem. And first target being this swing high at 15,202. I might actually speed this video up because it does take about 10 minutes and I don't really feel like doing this for 10 more minutes. So we'll go slowly. Price is trickling higher. As you can see, that's a beautiful candle right there. You see that wick. Where is it? Boom. See that high wick back up, and the next candle reaccepts. So we actually had a NASDAQ new week open gap here that we rejected at the first attempt. Second attempt we got up, and eventually we get into it, and you'll see that shortly. So let's go. We're going to slowly move it. As you can see, I'm moving my stop up, right? I'm not completely sold just yet. And, to me, could there be another opportunity to get back in at that fair value gap below? Maybe. So I'm not even going to play with fire and, add on potentially losing $215 in profit plus what I would lose on that retracement back down into the fair value gap. So I start to slide my stop very shortly here, and as I see this candle's green, I want to see it blow right through that blue shaded area, that new week open gap, and blow above that 15,202, right? You see there's a smaller red box in there. That is a 1 minute bearish imbalance. It's a much smaller time frame. I mapped it out because that's a pretty big area for a 5 minute fair value gap. And if I was to, flip and look short or something like that, I want it to be very, a much smaller area of risk. So I'm not taking on that whole gap. That whole gap is probably 30 points, and for me, I'm not one to risk $600 on a trade unless the potential reward really would make sense. So as you can see, we continue to trickle higher. Sell stop still at the same area, and following this break, I want price to get to the top of that red box, which is a 5 minute imbalance. And price continues higher. I move my stop right to the bottom of that previous resistance level. I would want that to hold as a support moving forward, so that's why I moved my stop in that area there. And we continue higher here. Take out a new high. So at that time, I would start to remap my range, even on a smaller little time horizon here, as you can see. Do I know when that high is set? I do not, but just to get a good idea of where an imbalance might form so that I could, again, I can move my stop upon a break, take the money, and then look for another retracement entry lower if I'm convinced that price still wants to go higher. That way I'm taking a lot of the potential what ifs out of it. And again, I scalp, that's what I do, and that's how I typically manage these trades. So are there times where I potentially miss out on some? For sure, but again, I like to protect my money. So as you can see, I moved my stop up, and now my stop currently is below, just a tick below that new week open gap. I would not want it to go below that new week open gap and reject for the second time. Um, Lucky for me, price does not. And if you can see right there, I added that little green box right underneath. That is um, a bullish volume imbalance. So we gap up on this 5-minute chart. What would confirm that for me would be that 5-minute close above to leave it open. Price does trickle back down below it, but I'm looking for the close of that candle, and I want it open um, and with no body overlaying it. To me, that shows me urgency to the upside, that we would gap up even on a 5-minute chart, right? On the 1 minute, you can see it quite often. It gets a little sloppy, but for it to do it on the 5-minute, to me, that's showing some urgency to move. And move we did. We move higher, took out another high, and as you can see, I'm just sliding my stop higher because this is the range that's set that took out that recent, black candle there, that high. So I'm continuing to set my range and set, again, same thing as what we looked at before on that 30-minute time frame. I want to see price dip down into that 0.62 to 0.79 area, and in particular a bullish imbalance, a order block, something of that nature that's going to catch it. If there's not one there, I usually don't end up taking the trade. So for example, at this exact moment here, not really a trade if we were to retrace down that I would really like to take. And we continue to run higher here. Let's see. And as we push higher, so we get to a point where I would prefer to leave a fair value gap open. So that's why, if you could see, I left my stop right below um, the high of that previous candle. Reason being, I would not want a fair value gap not to form. That's just a safety protocol. And as you can see right here, we don't form that, and I get stopped out. I take home a nice gain, and I get to ride my little SPX runners out. So um, this is how I'm taking like 99% of the trades that I take. It's just the model that I use. So I'm looking for imbalances in price, add those together with where price might go. So swing highs, swing lows, and I use um, fibs. I don't trade off of fibs. I use them for the measurements, but I use them to map out a range, and that way when I can get a imbalance in what I would consider discount below 50%, so 0.60 to 0.79 preferably, that is where I like to enter the trade. So that's all I got. If you haven't already, like, subscribe. I'll keep making these videos if you guys like them, and tune in next time. I'll do something similar to this again. So take care.